The 2008 housing market crash was the worst in all of our lifetimes. Yes, of course, there have been worse equity crashes, there have been worse times to own a car or gold or bonds, but we have never before seen such a bad time to own a house than the housing market crash, which started in around about 2006. Now, I find it hard to say then that people are naive when they think that it will never happen again, but that is exactly what these people are. They are naive. The reality is that the underlying problem that caused this housing market crash was never actually fixed, it was only hidden. Over the last few years, the housing market bubble has once again exploded across the US and a number of other countries too. For different reasons, yes, but the results will be remarkably similar. Today, we're taking a look at what might be the most terrifying thing I've seen about this housing market. A policy and a program from a worldwide bank that is sure to send us down that path again of a housing market collapse. Now, the actual news shouldn't be too surprising for you right now, as the title and thumbnail of this video have probably given it away, but 0% down mortgages are back in America, and there will be hell to pay for this. In particular, Bank of America are offering a zero down payment mortgage and a zero closing cost mortgage for minority communities in particular. Now, this news came out about a month ago, and it is supposed to help buyers at a time when getting a home has been more difficult than usual. Now, Bank of America cited a bunch of different things like rising interest rates and there being too many buyers for the number of homes for sale as reasons for why it's so difficult to buy a home in the US right now. This policy and this program is therefore supposed to try and fix this issue, in particular for minority people in America. The actual details of this program, though, are actually very worrying. Firstly, as I've already mentioned, it's targeting specifically minority buyers who on average have poorer finances across the US with more debt and lower incomes. Now, banks, especially in the US, actually have a history of specifically targeting minorities because they are easier targets when it comes to selling them expensive debt or predatory loans for things like cars or homes, and I find it hard to believe that this isn't the case this time around. These minorities will not put a penny down for a deposit or their down payment with these loans. They won't pay any closing costs at all, and they won't even have to pay for any kind of mortgage insurance, which is usually mandatory for loans which have such a small down payment or really none. The real kicker here, though, is that Bank of America will have no minimum credit score required for people to actually take out this loan, with the bank going for a more heuristic approach to deciding whether or not the applicant can actually afford this loan. Yes, let's make that clear. This bank is going to hand out loans to people with no deposit at all to buy a home at the peak of a housing market bubble, and they're not even going to check their credit scores first. Now, if you've been paying attention to the markets, you've been seeing how badly stocks are performing this year, and you're thinking about diversifying your portfolio, or maybe you just want to hedge against the ridiculous levels of inflation that we've seen over the entirety of the last year, then you need to hear about this video sponsor, Vaulted. Vaulted is the best way for an individual or even institutional investors to acquire physical gold with a great website and mobile app that makes it easier than it's ever been. They store and insure their gold in the Royal Canadian Mint. It's all real one-to-one allocated gold manufactured by the Royal Canadian Mint and certified conflict-free, meaning you can rest easy in the knowledge that you can request instant and physical delivery of your gold holdings wherever or whenever you desire. Their prices are the best in the market because they store all of their gold at the manufacturer and they cut out all unnecessary middlemen. They don't charge any premium or spread when buying or selling you gold, and they are as transparent as possible, meaning there are absolutely no hidden fees. On top of all that, they even managed to put out a load of really interesting content to keep you updated on the world of gold. Now, if that sounds interesting to you, then I highly suggest you check Vaulted out. There's a link down below for you all in the description and the comment section. Again, that's Vaulted with a link down below in the comment section and description. Now, my views on this program by Bank of America should be clear at this point. I think it is totally and utterly insane and incredibly dangerous, and it will fuel the last few months of this housing market bubble before the final crash actually starts. When that crash then comes, this program will have made that worse. Now, why do I actually think this though? Well, for a bunch of different reasons. Of course, back in the late 2000s, we got a lot of programs just like this coming out, and they got very, very popular for obvious reasons. People loved buying homes and they loved not spending their own money to do so. We even got to a point where some banks were giving out 110% loans where they would give you $550,000 for you to buy a $500,000 house, utter lunacy. Now, these banks were making a total killing selling these mortgages to these people, but as the years went by, they slowly ran out of people to actually give mortgages to. Rather than turn off the money tap though and stop making their massive amount of bucks, they simply widened the pool of applicants. If you have no or bad credit, well, no worries, we will now lend you for a house. If you can't afford to save for a down payment, well, no worries, we will now lend you money to buy a house. This fueled the bubble back then, and it's starting to fuel this bubble this time around as well. The real kicker here though, and the reason it is just so terrible, is that this doesn't just impact prices while they're rising, inflating the bubble, it will also impact the prices when they're falling or when the bubble is crashing. These people who by and large will have bad credit and wouldn't be able to afford to save for a down payment on their own will suffer far more than the average person as the recession actually comes. They'll be the first people to lose their jobs or to be forced to take pay cuts, and they'll be the first person to lose their homes when this happens too. The simple result of this policy will be that these people will be far more likely to default on their mortgages, to stop making their homes, to have their homes repossessed and then sold than other people. This will inflate the housing bubble at the moment because it will increase demand, at least to some extent, but it will also make the crash fall that much harder and faster than if these people were never given these loans in the first place. Simply put, it will make the collapse worse. To make matters even worse though, it won't just be the people with the loans who actually suffer here, the banks will suffer too. Now, one of the primary purposes of a down payment is to create sort of a buffer between the loan value given and the equity value of the home. If you put 20% down and get a mortgage for the rest, then even if a recession comes and God forbid you lose your job and have to sell your home, even if house prices have fallen by 10%, then you can still pay off your mortgage. When you put 0% down on a mortgage though, there is no buffer at all. If house prices fall by even 1%, or actually if they don't rise by about 5%, then the bank can't get its original loan back because there are a bunch of fees when it comes to selling a home. Now, you may just say, so what? Why should I care about what happens to the bankers? And frankly, you shouldn't care what happened to them if it didn't impact what happens to you. We need to remember though that the last time they all lost their money on their mortgages that they packaged up and sold on to investment firms, a bunch of these banks collapsed and we saw the worst recession in almost 100 years. You may not like bankers, and trust me, I'm no different there, but they are integral to the economic system, and when they collapse, everything else will fall too. Now, I'd love to say that the problem stops there and there are no more issues, but the reality is it actually goes even further because there is a fundamental problem with these mortgages themselves. Zero cost should always have red flags because in reality, nothing is free. Everything has to be paid for by someone, and that's exactly what will happen here. Do you really think the Bank of America actually care about minorities and want to help them own their own homes? Are they actually eating the cost of the fees for these minorities, or are they hiding the fees in the monthly repayments that these people will be making? The answer there should be pretty obvious. The monthly payments for these loans are going to be far higher than they would normally be, which is going to present yet another problem when unemployment spikes as the recession really kicks off. Bank of America claim that home ownership strengthens our communities and can help individuals and families to build wealth over time, which may be true, but I'm claiming that Bank of America don't care about that at all. They are a bank that exists to make a profit. They are there to make money, and because they are deemed too big to fail, taking a huge risk like this policy that we see here is fine, because if it doesn't pay off, they'll just get rescued by the government anyway. Let's also make sure not to forget that all of this is happening at the point of the highest house prices in the US in history. Also, just at the same time as interest rates are starting to rise as well. Now, following COVID lockdowns, housing prices have soared to levels that we've never seen before in history. This just means that the loans that are being given out are bigger and the house price crash will be worse as well. There is simply no way around it. Interest rates are rising, making home ownership more and more costly by the day. The average interest rate on a mortgage in the US has doubled over the last year, and it's still rising each day as well. Inflation is still sky high, and the only way to fight that inflation is for the Fed to crash the economy, to cause loads of unemployment, and to stop people from spending their cash. This will cause a housing market crash, and the size of that crash likely just got a little bit bigger thanks to Bank of America's policy. Now, I know that a lot of that sounds scary, but the reality is here that no one is actually forcing you yourself to take out one of these loans from Bank of America. If you are in a position where Bank of America are offering you those loans, Think long and hard about it. Make sure you're in a position to pay off the debt, even if interest rates are much higher than they are right now. Make sure that you're in a secure position in your life, that you're unlikely to lose your job and you're unlikely to need to move house anytime soon. Housing market crashes are very peculiar indeed, because if you're in a specific position, they can happen without impacting your life at all. Most Americans these days are on fixed rate mortgages, meaning their repayments are not going to go up as interest rates rise. Yes, the value of their home will fall, even below the value of their loan in many instances, but that's only actually important if you sell the home while that value is below the loan. If we just live below our means, be sensible, have some savings, and don't buy the most expensive car possible on a 72-month payment plan, we work hard, the chances are we will all weather this storm. In fact, if you're smart and actually a fair bit lucky, you might even be in the perfect situation to profit from this crash, to be the person that everyone wants to be, who goes around swooping up homes when the banks are willing to sell them for 50% off.